2025 turned out to be remarkably successful for financial markets, even though many major events happened throughout the year. Investors saw plenty of news stories, including announcements about tariffs in April, new developments in artificial intelligence technology companies, the passing of a major tax law called the One Big Beautiful Bill Act, and much more. Despite all this news, investors likely feel pleased because U.S. stock prices reached new record highs, international markets performed very well, and bonds continued to recover from earlier losses. For the third consecutive year, and 6 out of the last 7, the S&P 500 tallied double-digit gains, a remarkable run. Its value has almost doubled since hitting a low point in 2022. The past year reminds us that the best way to handle uncertainty is to stay disciplined and keep your eye on your long-term financial goals. As we prepare for 2026, learning what caused markets to move last year can help investors deal with future challenges and find new opportunities. Let's look at some of the highlights from 2025. The S&P 500 went up 17.9%, hitting 39 new record highs during the year. The Dow Jones Industrial Average rose 14.9%, and the Nasdaq returned 21.2%. The VIX, which measures how much stock prices swing up and down, remains low compared to history. It finished the year at roughly 15 after climbing as high as 52 in April. We call this Wall Street's fear gauge. The Bloomberg U.S. Aggregate Bond Index gained 7.3%. This was its best performance since 2020. The 10-year Treasury yield ended the year lower at 4.17%. down from 4.57% at the start of the year. International developed markets and emerging markets each gained over 30% in US dollar terms. The US dollar index ended the year at 98.32, falling over 9% from the beginning of the year. The dollar reached a low of 96.63 in September. Bitcoin experienced a decline of about 6.5%. From 93,700 to 87,647. Gold prices went up throughout the year, finishing at $4,300 per ounce for a 64% gain. Silver prices also rose to $70 per ounce from $29 at the start of the year. Let's look at a few of the major events that moved markets over the year. On January 21st, the $500 billion private sector Stargate project was announced. On January 27th, AI company stock prices fell on DeepSeek news. And of course, in April, we had the Liberation Day tariff announcement that led to a massive market drop. This was followed by a 90-day pause, which caused prices to rise again. On July 4th, the One Big Beautiful Bill Act became law, extending many of the tax cuts from the Tax Cut and Jobs Act. On September 17th, the Fed began lowering interest rates again. And on September 22nd, NVIDIA and OpenAI announced a major partnership and investment, raising concerns about circular deals. On October 1st, the government shuts down for what would be a record-setting 43 days. That same month, on the 14th, Jamie Dimon warns of cockroaches after the bankruptcy of Tricolor and First Brands. And finally, on December 16th, according to the BEA, the unemployment rate hit a 4-year high of 4.6% in the month of November. What themes drove markets across these events? First, artificial intelligence clearly dominated market stories throughout 2025. From huge infrastructure investments to worries about too much money being concentrated in a few companies, AI became an important source of economic growth and market returns. The Magnificent Seven stocks now make up around 1/3 of the S&P 500. Second, Tariff policy created uncertainty but had less economic impact than people expected. Tariffs on imported goods have risen sharply for many trading partners. Yet, the feared economic problems largely didn't happen. This is because companies adapted. Tariffs were paused or reduced, and consumer spending stayed strong. For investors, this shows that the outcomes of policy changes in Washington, whether they're about trade or government spending, don't always have an obvious effect on the economy or markets. Third, commodities had a roller coaster year in 2025. The Bloomberg Commodity Index rose about 10%, but that average hides a wide divergence between products. Precious and industrial metals stole the spotlight. Platinum, silver, and cobalt all more than doubled, while gold jumped nearly 70%. On the flip side, some everyday essentials got cheaper. Egg prices plunged 80% from last winter's highs. Cocoa fell by half, and oil declined to 4-year lows, keeping U.S. gas prices under $3 a gallon. Before concluding, I want to highlight some market and economic data from the fourth quarter. The November employment report showed just 64,000 new jobs, leading to the unemployment rate rising to 4.6%, the highest since 2021, with the Bureau of Labor Statistics emphasizing uncertainty amid shutdown-related distortions. Inflation data and third quarter GDP released later than usual offered some relief. The November Consumer Price Index rose 2.7% year over year, and core CPI rose 2.6%, both cooler than expected. A gross domestic product report showing 4.3% growth was much higher than expected. The bond market signals confidence. In December, the Treasury yield curve steepened as short rates fell and long-term rates edged up. For the year, the spread between the 3-month and 30-year Treasury widened by 70 basis points. Stronger than expected economic growth, sticky inflation, and anticipated Fed rate cuts contributed to the widening. Corporate bond spreads stayed near historic lows, showing strong confidence in company fundamentals, though any widening could pressure returns. Municipal bonds also saw tight spreads with a steeper curve offering opportunities for investors to lock in longer maturities. The year 2025 was strong for investors. While we celebrate a good year in markets, it reminds us how important it is to stick with your investment plan. Investors should continue to apply this lesson to their investment and financial plans for the coming year. Contact me with any questions. Thank you for your trust in us.